How's it going, everyone? This will be my example section of the course. I will continue to update it throughout time. And because of your poll in the Discord, we are going to just do this more as a raw format. There won't be any edits, so I will make mistakes. That's just the nature of it. But let's get into it. So going through the fractal model, this is going to be examples from the daily for bias, and then dropping down to the lower time frames. Generally, I focus on the hourly and 5-minute or the 30-minute and 3-minute fractal model. So what I focus on the daily for is the phases of price, closures, as well as equilibrium. So let's talk about this price action here. You can see we have had this continued expansion. And you can see we have 3 days of expansion, and then it just continues, right? We don't have any swings in here. So after an expansion, there's a few things I'm going to either expect. We either get a retracement into a fair value gap, right, to continue higher, or a reversal to continue lower, or a consolidation. So what does this look like here? Well, we're not retracing, we're not reversing, so we are just in a consolidation here. So with price breaking out of this consolidation, there's 2 things that are going to happen. We're either going to form a low in here, confirm it, and then have a continuation out of this, breaking out, or we're going to come back in the range, right, closing back inside this range to continue to the other side of the range. So taking a look at this is when I then pair it with daily closures. What does this daily closure tell me? Well, we sweep out these highs here, and we have a nice aggressive close below the previous day low. It engulfs it, right? So candle 2 closure, because it sweeps the high and closes back inside, right? So with that, where could I anticipate price to continue from if we're going to continue lower? From the lower half of this range. So with that, then I can go down to the hourly time frame. Here is where I will throw up an indicator so you can see the higher time frame, right? And so marking that up, you can see if I'm expecting price to continue lower, where do I want to see it from? The lower half of this daily candle. This is then where I will look for hourly, 4-hour, or lower time frame points of interest to form the fractal model. Right, so I'm using the daily fractal model in the sense of sweep, closure, candle 2. So looking for candle 3 to expand lower, taking out previous day low, and then I'll see how candle 3 closes if candle 4 continuation, right? So marking out the T spot, where would that be? Marking out the change in the state of delivery, 0.5 of that. From here to 0.5 of that, as well as the open to the EQ. Right, so the open of this candle to the EQ of the previous. So with this, you see how there is no overlap? I'm going to choose the closer. Why is that? I don't want to see price go all the way up here to form the wick, right? At that point, it would just run out these highs. So I want to see a nice shallow wick, or a shallow run to form a small wick to continue lower. So if this is the area I'm wanting to see respect, right? Can sometimes be even a little bit more. Do I have a PD array in that area? Well, I look right here. I have a fair value gap. So now I have a directional bias, which is down from the daily closure. I have an area that I want to see form the wick. I have a point of interest. Now, do I have a candle closure? I do. So now I have, going through the flowchart, my daily bias or my directional bias, my point of interest, and then a candle 2 closure. So what do I need to look for next? Well, I'll use my lower time frame pairing to look at the 5-minute. So here we are on the 5-minute, and taking a look at this, what do we see? Well, let's go ahead and mark it up. So going ahead and marking it up, what do we have? We sweep out this previous candle's high, close back in, that would be here and here, right? And then what do we look for? A lower time frame change in the state of delivery. So I find this high, it's going to be the wick high, find the series of candles that made it. Now in this case, you see how it's not very clean in here. It's not a clean low that makes the high. So what I'll do is I'll just use the whole structure there. So you can see, kind of looks something like that. So I'll just use this whole level here. And it's not a great example, but we're just going to go through price action, show what it gives us. So at the start of the new candle, have we closed below this? No. So that means we can't take entries yet. We have to wait until that occurs. Now in this next candle, do we close below? We do. So now if you go through the flowchart, it says we can take entries within that higher time frame candle. So now that entries are valid, where do I expect to hold? Well, I can go ahead and look at this as we've already went into this fair value gap, and then we have close below the up close candles into that fair value gap. Now I consider this to be a protected high. Now this would be the intra-candle change in the state of delivery if it would have happened within this candle, but since it happened prior, this is one of those cases where I don't really want to see an intra-candle change in the state of delivery because at that point, I would have wanted it to already expand, right? So at this point, it would be a valid entry because this is acting as that intra-candle change in the state of delivery. To continue lower, can look for 2R that way. So let's see how that works out. Or if we're expecting a continuation, we have a new fair value gap, new opposing candle in here, right? Let's see. Right there, secondary entry, or even when we close below, that is technically valid, right? So we hit 2R on that. If I was waiting for the intra-candle change in the state of delivery, which would be this, my entry would look something like this. Now let me ask you, does that really make sense after already running out this short-term low or about to? No, right? That doesn't make sense in terms of risk to reward. So if I do want to take something like that, that's when I would want to see either something like a limit order or another run of a short-term high to put in a protected high. So let's see what happens. There we reach higher. It runs out the low. Why wouldn't I be taking an entry right here? Because it is an intra-candle change in the state of delivery. We just ran out this low. If we're going to get a new phase of price, that's where it would be. Now I expect this high to get taken out. Let's see. That high gets taken out. That's somewhere where I could consider an entry, either there or on this retest, right? If I'm still under the impression that it continues lower, right, to this range low. Could do something like that, right? Or just enter. So let's see what that happens. See what happens with that. Right, and there it goes. Cool. So that would be our first example. And so the main points I wanted to drive across here, it's all driven by that daily and hourly chart, right? We have our daily setting up the directional bias, which says, hey, in this candle, I'm looking down, and then I'm looking for a point of interest and a candle closure, right? In the T-spot. So would I still be thinking short here? I'm not really wanting to short below lows, right? If I'm wanting to short, I want to short prior to those short-term lows being ran out, because if we're going to get a new phase of price, like here, it's going to occur at sweeping out those lows, right? Let's see what happens. And you can see we have a nice reversal structure there, and then we are coming back into the range. So I don't personally trade reversal days. If I did, I could trade this back into the range, but let's see what happens. I will let the daily candle close because that gives me information. As we move ahead here, we have the new daily closure. So taking a look here, what do we see? We have a bullish closure. Now, if you remember, if we go back out to our daily chart here, my whole idea was, hey, we're trading. We broke out of this consolidation range. We're coming back in. So if I see a daily close like this, let me clean up the chart here. That either means that I am wrong and we're going to have a swing point form here and trade it higher, right? Which I can look for. Or if I am correct in my analysis, that usually means previous day high forms the reversal to trade lower, right? So with this, I have two options. I can either look to trade it against my bias, trade it long, right? Or I can let it go and see if we form that reversal, have another swing point form, and then trade the following day lower. So let's take a look at if I wanted to trade it, what would that look like? So if we get into the next day, we're always going to do this, mark out our EQ, right? In this case, we have a large wick. So I want to see 0.5 of this wick be respected. And what do we want to mark out? Do we have the change in the stage delivery? We do. And mark out 0.5 of that on the bodies. So marking out those two areas, right? So from the open of the new candle down into that. And then 0.5 to the open. That gives us our overlapping area where we want to see price respect if it's going to trade higher, right? Now, one thing to note here is our previous day high is still intact. If price would have opened, taken out that high and then reversed, we're already forming that reversal off previous day high. I don't want to try to long that. If I want to try to long, I want to make sure that that's still intact because that gives me my target. So if we are going to form a reversal in here, what has to form? We have to form a swing point. So a candle 2 or candle 3 closure. If I look in here, what do I notice? Well, here's our change in the state of delivery. After we form that, what happens? We sweep out a low and then we close over here. So I can refine this down even a little more by using 0.5 of this level. I want to see that hold generally, right? But in the end, I just want to see this low hold if we're going to trade higher, because that would be the invalidation. So let's see what happens. We need a swing point to form. Nothing there. I'm not interested in these swing points. Why? Well, it needs to sweep out or reach a point of interest. There's nothing there that tells me to be bullish, right? And this is where it's a bit suspect, right? Because we already took out that swing point high. So ideally, the better setup here, instead of trying to long, would be trading the reversal day, right? Because we formed the reversal right off previous day high, we have an ideal candle to closure. Because we sweep, we close below here, but then trading this candle lower. But if I'm going to keep my bullish bias, let's see what happens. It would need to form a swing point, right? And there we're forming a swing point. We haven't quite closed below there, right? So if I did still want to try to trade this long, right? I personally likely wouldn't, because we've already taken out that high like I was talking about, but I would go to the 5-minute and I'd repeat the process, right? So I'll come down here, I'll remove my drawings. We have what? Our candle closure. I can mark that out. And then I want to mark out 0.5 of the wick. This is kind of a doji candle, which is less preferred. With marking out 0.5 of that wick there, I'd also want to see, do I have the change in the state of delivery? I do. Right, and now on this one, it's a bit cleaner, right? You see how this reversal structure looks versus the previous example? I can go ahead and project that out, right? So that gives me projections or nice areas to take profit at. And these are a confluence, right? So for me, I would be looking at these highs right here. And then -4 lines up right exactly with that high. So it gives me targets, right? Just cleaning that up a little, come back, mark out 0.5 of this bodies on the change in the state of delivery, and mark out that area. So now we know if we want to see price trade higher, I want to see the wick of this next candle formed in this area, right? It'd be right in there. So let's let this play out. We do form a little wick in there. This is not something I'm going to trust, right? If I want to take an entry in here, where does my stop need to be? On this low, right? So I could take something like that. This is just where most of my losses come. So I wait for that continuation or the intra-candle change in the state of delivery, right? So let's see. We close over. Takes a bit of time, but it does. Now, one thing to notice here, see how we're not taking out this high yet? If we take out that high, that's usually when I can wait for a retracement to get on side with a limit entry. But here, I know if I can get to R prior to this high getting taken out, that works for me. And there we go, 2R there, right? So if that isn't something I want to do, I can wait for the limit entry. Look for 2R like that, works as well. I prefer just to not miss trades. Right, so let's see. Now everything in our flow chart has been met, structure-wise on the lower timeframes. And there we go, we hit 2R, right? So that works even though it's kind of opposing my bias, right? Let's see what actually happens after this. Right, it goes and hits that 4 to 4.5. Right, cool. Let's go back to the hourly. Right. So it does go and take out those highs, and that is how you could do it, even if it's somewhat opposing your bias. Now here, wherever it goes, that's fine. My bias is still bearish, but I'm going to see how this daily candle closes. This daily candle gives me information. If it closes like it is now, that's pretty bullish to me, right? Looking for another continuation. So let's wait. Right, so right there, a bit messy. Let the daily candle close. And what do we notice here? That's a pretty bearish reversal, right? Look at the V shape. Aggressive up. It does mess around in here, but let's look. Right? It's pretty aggressive. And this daily candle is very bearish. It's a candle 2 closure. Right? So with that, right, that's also back in line with my bias, right, to trade it lower. And another thing to notice, we left equal lows right here. Cool. So going back to this, if we were expecting price to trade lower here on the daily, I want to mark out 0.5 of this whole candle here. Now, why not just the wick? Well, let's take a look at this. If I was to mark out just the wick, right? Do I really want to see price, if I want it to have a shallow wick, trade all the way up there, make a wick like that, and then try to trade it all the way back down? Or do I want to see more of a shallow wick? More of a shallow wick, right? So more focused on that area. So marking out from the open, the new candle, to the EQ, the previous, right? Can also mark out that change in the state of delivery. 0.5 of that. And once again, they don't overlap, so I'm less interested in this. I don't want to see price reach up to that. So right in here, what do I want to look for? Do I have any points of interest? I have a fair value gap here and another fair value gap in here, right? So do I need to know which one it goes for? No, I'm just going to let candle closures tell me what is happening. Okay, we're respecting this fair value gap. We have a candle 2 closure. So we have what? Directional bias. We have our point of interest. We have a candle closure. From here, I can drop down to the lower time frames. Or let's say, we'll do this twice. I don't want to use the lower time frame. Let's say I just want to execute on the hourly. I could look to take an entry on that close, the candle 2 closure entry, right? Something like that. Or I can wait for what? That intra-candle change in the state of delivery, right? Because this is a daily hourly fractal model. Either one would work. This one would have less confirmation, right? Because this high isn't protected yet. Once we close below there, that would be more protected. So let's see. Do we get the closure below there? We do, right? So then this is something I could take as well, right? And you see I'm getting 2R just around that daily low, right? Which is ideal. And that equal low. Or my preferred method is going back here and going from my daily to my hourly, and then refining that from my hourly to my 5-minute. So we have the hourly candle closure, can come down here on the 5-minute, right? And what do we all want to mark up, right? We have, I'm just going to clean this up. We have the sweep, right? Which is sweeping that previous candle's high. Do we have a change in the state of delivery? Well, this one's a bit weird, right? We do make the high here, so I could technically use this level. But if we're actually looking at the leg up, right, it's going to be from here. Right, so that is the one I would use. I would kind of ignore these in here. So with that, what could I do? Well, I can anticipate price to respect 0.5 of this area. Right, so if we're using that, and then if I'm marking out 0.5 of the EQ, right, let's mark that out, or 0.5 of the change in the state of delivery, 0.5 of the EQ from the open to the previous EQ. Right, this is the area I'd want to see price respect, right, to trade lower. So I could either, and I talked about this a little bit, positional entry. I'm going to take a positional entry. That just means I want to be in it. But where does my invalidation have to be? Either on the high or above a swing point, somewhere I expect it to hold, and then looking for 2R, right? Something like that. Or I can wait for that intra-candle change in the state of delivery or the retest, right? There's lots of different options. Let's see. Price opens up. We trade back into this area. This is something I could take as a retest, right? That gives me better risk to reward. I can put my stop on this little swing here. Because if price trades to this swing, it's just going to trade to that swing. And then you can see I get 2R pretty quickly on that, or even 3 to 4 on this low, right? Or I can wait for that continuation or that intra-candle change in the state delivery. Right? Let's see. There it sweeps. There I could look to sell this my stop there. 2R, that would be the intra-candle change in the state of delivery entry. And what does that mean? It means I've anticipated this wick to have formed, so I expect it to expand lower. So there we go. We now have a new protected high, which my stop loss is on. This would be another continuation possible. And then there we go. Right, so there's an example of going from our daily, right, with a candle 2 closure, trading candle 3, which I think is the best setup, so trading candle 3. Then using the hourly to refine that down, right, finding a point of interest in this T-spot or in the lower half of this candle 2, and then refining it down with a candle 2 closure on the hourly to then trade the 5-minute. So hopefully that makes sense. Let me know how this example is, and if you guys do enjoy this format, then I will make the rest of them.